Hey guys, Bryan Karp, aka Mailbox Money, with my co-host, the man, the myth, the legend, the professor, Anthony Loffredo. And we are here on the Brick to Brick podcast. This podcast is for you if you're a brand new investor who's looking to purchase their first house hack, or you're a seasoned real estate investor with a multi-million-dollar real estate portfolio. You're going to enjoy hearing the inside information that we get from all of our guests. On this podcast, we interview brokers, investors, developers, property management companies, syndicators, any piece of buy and hold real estate.
Hey guys, today on the Brick by Brick podcast, we have Cole and John from SVN. Guys, welcome to the podcast and thanks for hopping in.
Yeah, thank you for having us. Excited, and thanks for taking the time before a week before Christmas. So we're excited to be here.
Yeah, thank you guys.
Yeah. Awesome. So guys, we think about you guys as the Eastern Tennessee Titans. You know, we think about you guys as the Knoxville boys. Sometimes when we are speaking just between Anthony and myself and some of our business associates, like, we got to catch up with the Knoxville guys. I'm so excited that you guys carved out some time to chop it up with us. I always like to start every show with just give us a quick background, how you guys got into the game of multifamily real estate and, you know, where you are today in your business.
I'll start. My name is Colin Morgan. I'm from Knoxville, Tennessee. Went to the University of Tennessee. I've got my University of Tennessee swag on right now. We play in the we're chasing a national championship tomorrow, so I had to wear it today. But majored in finance, graduated from UT, and immediately became a broker, found my way into multifamily, and that is how I met John. We have since built a multifamily team. We have a full-time analyst on our staff, full-time director of operations, and we cover it pretty much anywhere from Nashville to the Tri-Cities, so all of East Tennessee, and we are based out of Knoxville. And we do anything from LIHTC apartments, so affordable housing, to student housing, to a multifamily development land, market rate apartments. So pretty much anything in the multifamily world we cover.
Awesome. Yeah, so I originally went to school to be a doctor. While in undergrad, realized that every doctor I knew said, John, don't go to medical school, start a business or get into real estate. So kind of fast forward, I was very fortunate to work for a large syndicator for 4 or 5 years. That's eventually how I met Kevin and Cole and SVN Wood Properties. We were clients. Learned the syndication world, kind of started on the principal side, and then became a broker, realized that, you know, you can do both, and that the brokerage world's a really, really good place to be if you want to be in real estate. So very blessed. And like Cole said, we do everything from, you know, student housing to affordable, to market rate, to development land. And we're excited to be on the podcast today.
John, it's so funny that you went to school to be a doctor. Like, I always wanted to make the salaries of doctors and lawyers, but I knew that I didn't have the background to do that. So for me, I said, okay, if I want to make doctor and lawyer money, I have to go into sales. And then I was like, okay, 90% of the first generational millionaires were made through real estate. So I said to myself, wait, this is the perfect combo: real estate sales plus being a salesman. And, you know, that's funny that you started going down that road, and then you pivoted and you said, all right, business owner, small business owner, let's go into the brokerage side.
Yes. Yeah. Early on in undergrad, I had a few close mentors. They were all surgeons, and, you know, they're obviously making a very good living, but they're working, you know, 5 days a week, long hours, you know, odd hours at night. And they just said, John, if you want to have a work-life balance, you know, go all in on a business, go all in real estate. He even said, if it's not real estate, start a tow truck company, whatever it is, just go all in. And if, you know, you're passionate about medical, or, you know, the medical field, do that. But, you know, if you really want the freedom that, you know, money and things can bring, you know, get into real estate, start a business. So yeah, it was a good road and a good choice.
Talk to me a little bit how you guys set up the team. You know, I find it so interesting. When we first met you guys, there was a bunch of the team members, all of the emails and correspondence I get from the team. How does the team look today, and where do you guys see it over the next year growing?
Yeah, so myself, Kevin, and John, we are the senior partners. Kevin has been in Knoxville for 20 plus years doing multifamily. So he's seen Knoxville go from what used to be called the scruffy city to now a major hotspot for investors across the United States. And so with Kevin's 20 years of experience, John's syndication experience, we all decided, hey, let's build a team. Let's not work and compete against each other for market share in the brokerage world. Let's create a team and dominate. So we formed our team, and then after that, thankfully, we became so busy that we decided to hire a full-time director of operations who handles all of our transactions to make our clients' experience as smooth as possible. And then just this year, we hired a full-time analyst. So if you ever want a free price opinion, comps pulled, CoStar reports, anything like that, we're happy to offer that to either of you guys or anyone listening. We want to give as much good data as we possibly can.
And how do you guys separate the roles? Like, who does what? And obviously the analyst is handling certain things, but how do you guys separate what one of you guys do opposed to the other one?
You know, we each take lead on a transaction, and to make it simple for our clients, like if I'm lead on a deal, then I'll be the one that is handling that transaction throughout the entire process. Kevin and John are kept up to date on everything, but you don't have to communicate with all three of us all the time. So if we just assign a lead on each deal that we're working on, and that way it's a smooth, easy communication process for everybody involved.
That's awesome. John, Anthony and myself, we have our own syndication, and we're always, kind of bouncing ideas back and forth as being general partners. I know that you've raised outside capital and you are still a GP on certain deals. So I think that's huge to be a broker and, be a part of that, but kind of talk to me a little bit about what that looks like.
So when I first started 3 years ago in the brokerage world, it was kind of actually really tough because, as an investor, you look at things, completely different than how the brokers do. So if you're representing a seller, typically you want to get that seller the highest price as a broker. You want to be reasonable, but you're looking to get that seller the highest and best price. As an investor, you want the lowest and best price. So when I first started, a lot of these deals, I'm nitpicking, the underwriting. I'm saying, hey, here's X, Y, and Z. And we still do that, but it was a mind shift that I have to find the positives in these deals to really become a good broker to, per se, because if you look at it, every deal as an investor, we'll never sell anything, if that makes sense.
Yeah, definitely does. So now you're involved as a GP. How many doors do you have at the current moment?
So we just sold a bigger deal here in Knoxville, 107. So I'm still a part. Actually, we're closing on a deal, 34 townhomes that I'm a GP in next week that'll be in a GP. And then I'm still a part of 4 assisted livings, 3 in Florida and 1 in Virginia. And so we raised outside capital for those. And we saw there was a huge opportunity with the silver tsunami. 10,000 baby boomers turn 65 every day. So we started pivoting in my prior life to assisted livings because it's very similar to multifamily. And so we saw that as a really good area of opportunity.
Are you seeing deals come across your desk and then you're going out and raising capital for something? Or is it that you're raising capital and then when the right opportunity comes across your desk and someone like Anthony and myself don't take it down, you step in? Like, how does that work?
So to be very clear, I'm a broker first. And so, I'll buy 1 or 2 deals a year, and they're typically small deals. And, a lot of people ask, hey, how can you be an investor and a broker? I always say I'm a broker first. I'm not out there cherry picking the deals. We're not doing that at all. I think everybody's goal is to earn passive income, to grow, a net worth, or to grow income over the years. So we're not, having all this transactional income all the time. So what we do, we look for good deals, and if there's an opportunity, we'll take it. But we do not cherry pick the deals, and we're definitely brokers first, not investors first.
Yeah, we are not out here buying deals. That is not our priority. But because we believe in what we sell, and a lot of our clients are out of state, and if we can help them raise money like John has before, we're happy to do so. And a lot of the times they'll ask us, hey guys, we'd love to have you involved in this process. You guys are local. If you guys want to throw in some of your fee, you're welcome to do so. And we're always happy to do that and love when we are offered that opportunity. But we are brokers first. And what John was touching on with regards to underwriting, we try to be aggressively realistic to get our sellers the best price possible, but we also try to underwrite every deal as a buyer would at the same time. So aggressively realistic is our motto.
Yeah, a lot of brokers have never owned anything and never looked at it from an investor's eyes. I mean, you're thinking, how many HVACs are going to go out this month and where's my cash flow? And so we have that realistic approach to our underwriting. And to piggyback off what Cole said, we truly believe in the vehicle that we sell. So we'll throw in our commissions to deals. We like to invest as LPs as well, because we truly believe in the deals that we sell. So.
No, that makes sense. So, since Bryan and I started, we have seen a change in the market, but we're still seeing a major gap between the realistic price point on where the buyers want to be in, right, and where the sellers want to be. There's still that gap. Have you guys seen any difference, or has it started to close up yet, or are sellers getting a little bit more realistic based on what the rates are and what the buyers are actually able to afford at this point? Or are you guys still seeing a lot of the sellers stuck in that 2023 valuation standpoint?
We've seen a mixed bag. We've been able to get several deals across the finish line this year, negotiating some seller financing. Also, another tip that I'll tell anyone listening to this: when you're searching for your debt, make sure you shop at every local bank that you possibly can. Just here in Knoxville, I can give you an example. Like, one bank quoted a deal at 8.25%, another was at 6.4%, and then a third bank was at 7.5%. And that is a massive swing in value and what that purchaser can pay. So we have tried to build great relationships with our local lenders here, and that has helped us get several deals done, like the 34 units that John mentioned that we're closing next week. Without our local lending relationships that we have, and knowing what a bank, how aggressive a bank would be with interest only and all of the different terms, without that deal would not have happened. So there's still definitely a gap, though. Sellers still dream of the 2021, 2020 prices, but unfortunately rates haven't moved that much, and so there's still a gap that we're trying to always negotiate around.
You guys might have taken it the wrong way, but I would prefer to work with a broker who invests, because you guys have the same mindset that we do, right? So I actually think it's a huge benefit that both you guys have syndicated and both you guys have been GPs and LPs. I never see it as competition, right? I'm a real estate broker here in Long Island, New York, and I invest here all the time. And I just feel like it gives you another edge above the competition. So actually, I think it's huge that you guys both invest in it, because you understand what we're looking to do, and you understand where we're looking to move the vehicle to. So I think it's a huge bonus to have that both you guys are involved in stuff like
definitely
that.
Able to being involved on that investing side. I mean, you're able to kind of manage the expectations of the sellers more, because you as a buyer kind of know where the valuations are going to be, so you can kind of set that expectation up for the seller right out of the gate, so that gives them a little bit more realistic view on what they're actually going to end up selling their property for. So
yeah, we had just had a really good example of this, where most of our clients are now out of state, and so we do a lot of FaceTime tours of these properties, and so we can kind of be really valuable boots on the ground, because we know what these groups want, the returns, what they're looking for. The big no-nos and the big good things to look for. So, if they can't be here, obviously it's cost effective for us to be able to know kind of what they want to see, what they want to hear, and what they, the big bombs that they need to see. So it helps a lot.
Tell us a little bit what you can about that 34 unit, just so the audience and everyone could hear something that's about to trade, and they could hear what it went for the door, what the cap rate is. I'm really interested in hearing that.
Yeah, so this is a brand new construction, just completed this year. So we're seeing a huge shift. So when I first started, early 2000 or early 2020, everyone was looking for these 60s, 70s value add, apartments. And now a lot of people are realizing, hey, there's a lot of ticking time bombs with the sewers, the electrical. A lot of, these buildings were built very well, but a lot of the mechanicals are kind of ticking time bombs. So we've seen actually a huge shift and a lot of people wanting newer construction. So this property, 34 units, far west Knoxville in Loudoun County, really, really, really good property. The developer built it, did an extremely good job. They built it as if they were going to hold it forever. So they used really high quality finishes, high quality materials. It's in one of the fastest growing counties in Tennessee as well. And there's just a huge opportunity. The buyer's taking it over it'll be 100% occupied, which is a really, really good sign. They filled up extremely quick. And there's very low deferred maintenance. Like I mentioned, a minute ago, a lot of these older properties, people don't account for what an HVAC costs or what a sewer line potentially could cost. That could be so detrimental to a property. And if you're syndicating, 30, 40 grand for a sewer line, that could wipe out, significant amount of returns. And, when you have investors to answer to, it's not a good call to have. So this property, we're super excited because it's brand new, built, very well built, 100% occupied. And we believe there's a good amount of rent that they'll be able to achieve in the next 5 years, or rent increases. So,
and as a buyer, it's
1 bedrooms, 2 bedrooms. What are they?
So they're actually all 2 bedrooms, 2.5s. I think they're roughly 1,600 square feet.
Yeah, and as a buyer, it's a very different business plan when buying a fully stabilized, brand new construction asset versus buying a 1960s, 1970s value add deal. So we try to underwrite accordingly. We love value add deals. That's probably most of what we do here in Knoxville. A lot of mom and pop owned properties that end up trading to guys like yourself. So we try to underwrite accordingly for those CapEx items that are coming down the road, like John mentioned.
Yeah, and we still love that. We still think there's a huge place, and there's a lot of, 60s, 70s, 80s properties in Knoxville that are still going to be really, really, really good deals. But you just have to account for that in the purchase price and make sure you know what you're buying.
Give us a little idea, or whatever you can. What did that one trade for? What was the rough numbers, price per door for brand new? Is this a product?
Yes, a product. So low 200s per door. The rents were right around $1,800 per month. The cap rate's low 6s on it. And there's just a lot of value add. So right now the owner pays for the water. I think we'll eventually switch that over and start billing it back. There's quite a few low hanging fruit for value add on this property.
And like with new construction, all of those units came onto the market at one time. So they would get their COs and put on the rental market 8 units at a time as they were delivered. And so that, as a developer, you're just trying to get people in the doors, try to get as much rent as you can, but get people in the doors. And as those leases come up, the buyers are planning to increase rents just because 1,800 is a little low for this type of Class A product. So like John said, there's a lot of low hanging fruit. And then, Knoxville in general, since COVID hit, our rents have more than doubled. The average occupancy rate has not dropped below 95%. It sounds odd saying this, but COVID was great for the multifamily market in Knoxville. A lot of investors from across the country, like yourself, said, I'm done with New York, I'm done with California, I'm done with Michigan, I'm moving my capital, my families, in some cases, to Eastern Tennessee and investing and building a portfolio here. And so far, just yesterday, the National Association of Realtors put out a study naming Knoxville, Tennessee, as one of the top housing markets going into 2025 as a top 10 market. And that was the only market in the entire state of Tennessee that made that list. So we have a housing shortage. Our apartments are full, and we're not building enough apartments and enough homes to put people in that are moving here. And the migration patterns have changed drastically since COVID. U-Haul puts out a list every year naming the top destination cities, and Knoxville has been on that list every single year since COVID happened. So it's a great market to be in, and I think rents will continue to gradually increase, and occupancy is so far holding steady.
Yeah, it's definitely sounds like a good place to be in. And I think you brought up a really good point And for a lot of our listeners, when they think of Class A, they think of no value add potential, right? You really only think of, in everything you read and you listen to, it's always typically get that 80s, 70s, 80s product in order to add value. You brought up a really good point where when you build a brand new asset, you really want to fill it as fast as possible, right? So like you said, you're going to give concessions, you're going to give a little bit of lower rent just to kind of fill it up without a lot of people realizing that there is value add because it is under market, because you hit the market with all of this supply at one time. But now, once it's stabilized, you actually can kind of jump the rents in 2-3 years higher than you normally would think out of a brand new Class A building. So that's actually a really good point.
Talk to us a little bit about the LIHTC. I know it's not something that fits our business model as value add guys, but it was something very interesting when we met with you guys back in March when we were in Nashville together. But I think the listeners really would love to hear about it and some of the different opportunities you guys have in the LIHTC space.
Yeah, so we've sold multiple properties, a couple hundred units that are LIHTC properties. And so a very quick overview. So typically these low-income housing tax credit properties, there's a 30-year contract, but with an option to exit the program after the 19th year. So what that means, there were a lot of properties built in the early 2000s. So a lot of these properties have that option to exit. So it's very attractive for investors to purchase these because you can get a early 2000 vintage, and the rents are severely below market. And if you exit the program, there are some downsides, and there's a sunset period to get the current LIHTC residents out. But if you can wait that period out, we're seeing some properties that you can literally double the rents. And these properties were pretty well built. They're all larger units. They typically have washer dryer in every unit. They typically have good amenities as well. And you can get them for really, really, really good basis. We've sold some for 60, 70 a door, others for just above 100 a door, depending on the location. But if you looked at these properties, you'd be like, what the heck? Like, it's a home run. But there are some challenges, and if anybody would want to learn more, we can dive deeper on that. Feel free to reach out. But we think there's a huge opportunity in these properties, just because you can get them for what you're paying for a 60s, 70s, 80s asset, or most of the time significantly cheaper. And there's some headaches or hurdles you have to get over. But if you can overcome that, they're home runs.
So are they, just for my own knowledge and for the listeners, so they're government program tenants currently, and then when the sunset period, you basically would push them out or ask them to leave and move it up to market? Is that how it works?
Yes. And so it's essentially rent restricted. So every year the government says, hey, for a one bedroom, they use the average median income, typically 50 or 60% of that. And that's how they calculate the rent. But the sunset period, after the 19th year, you can apply for a 1-year period, which is called the qualified contract period, where the state can legally market the property to other LIHTC owners. And if no one purchases that property through the state, then you can have a 3-year sunset period where if a current rent restricted resident leaves the property, you can replace them with a market rate resident. But anybody that's currently rent restricted in the property, you cannot evict them unless it's for just cause for 3 years.
So essentially it's like a 22-year period, really, when you're kind of underwriting it. Assume the worst, right? Assume that everybody's going to stay until that period, right? Because that's probably what you guys see a lot, where because if they're paying severely under market rent, they're probably going to do everything they can to kind of stay there, right, until it becomes an actual free market apartment.
Yes. One of the properties we sold in Johnson City, in the first year, they had over 50% of the residents leave. And so there are some tips that we could talk about if anybody wants them. There's some tips and tricks that you can do, but they had over 50% of the property turned within the first year, which significantly helped boost the NOI.
Yeah. Now, was there a specific buy box that you guys operate in as far as on the broker side? Like, is there a minimum doors or a maximum doors? Is there a certain space or a class that you guys are, that you're kind of honed in on?
We'll sell anything. I forgot to mention, as part of our team, we have a junior advisor on our team. He covers anything 10 units and under, anything 10 units and above. Kevin, John, and I are happy to assist with. And like I said, it could be student housing, could be built for rent. We're working on several built for rent, new construction deals right now. Anything multifamily, and we'll do it. We also just sold a 85 unit motel that was converted to 85 studio apartments. A nonprofit bought it. It was turned into affordable housing and is now home to foster care students that have aged out of foster care and were homeless. That owner, it's been one of our favorite deals we've ever done. CNN actually was just in Knoxville and did a story about the property. The Knoxville mayor was there for the grand opening. It's also housing men and women that are victims of domestic abuse. So, like I said, anything multifamily housing related, we cover it. Even a duplex, we're happy to help you on it. And like I said, you have all of our team resources, our analysts, and our director of operations that can guide you through the transaction along with us.
I always like to think about myself and Anthony a year ago, where we just thought Tennessee was this big open water and we didn't really understand the different towns and the different submarkets. Can you give the listeners some, not even neighborhoods, but towns that you feel that are up and coming and great opportunities to keep their eyes open for?
We love the Tri-Cities, which is Bristol, Tennessee, Kingsport, Tennessee, and Johnson City, Tennessee. A lot of value add properties there that are mom and pop owned. Simple value add, like just professional management, professional bookkeeping, professional marketing of the units to get $200 to $400 rents. We sold a property last year that the average rent was $400 when we sold it. The average rent now is I think $950. And so there's plenty of product like that left. And we've sold over 1,000 doors in the Tri-Cities alone in just the past year and a half. Knoxville is, of course, like I mentioned, one of the hottest markets to be in. I think that's going to continue to appreciate. John, what other towns am I missing?
I think Oak Ridge. Oak Ridge is a very stable market. There's a lot of smaller multifamily there, and we have a couple investors that have purchased some larger deals. But with the Y12 National Nuclear Complex, I think there's a couple $1 billion in new investments being spent there. And obviously nuclear energy, this is part of where they created the nuclear bomb for World War II. So this, complex is not going anywhere. And so I think that's, it's one of the largest employers. I think that area is very, very stable and there's a low supply and it touches Knoxville. So I think that's a huge, huge area of opportunity.
And just to give everybody, all the listeners, an idea, how far east are you guys from Nashville?
Just under 3 hours, and we're about an hour and a half north of Chattanooga.
Got it.
What do you guys see what do you see in your crystal ball for 25? Give us what both of you think separately, if you don't mind. And then I'd like to see where you guys, where you see 25 and 26 in the multifamily space.
Well, what I know is that the election is over, thank God. And so that mystery of who's going to win, what's going to happen, that is now over. So we've seen a lot of investor, just from not even getting political, but just the election being over and the chaos of that being over, we've seen investor sentiment increase positively. But so I think that is over. I think rates may gradually come down over 2025. The Fed signaled that they're going to pause rate cuts. I think with the upcoming administration, that could potentially change pretty quickly after January. But I think 2025, I think transaction volume is going to be higher than it was in 2024 for the reasons I just mentioned. I think in Knoxville, our transaction volume as a team has been on par with what we did last year, which we are very proud of, considering the fact that many other markets, multifamily sales are down 70% just because of rates. It's been hard to get deals done, but Knoxville is such a good market. Rents continuing to increase, occupancy levels holding steady. We're still able to get deals done here, and I expect that to continue into 2025.
Yeah, and kind of to go off what Cole said, we're very lucky to be in East Tennessee because we are continuing to see positive rent growth, positive migration, a lot of jobs moving here. So I think, 2025, we are seeing some more deliveries of some larger apartment complexes, but after 25, it kind of drops off. So I think after, in 2026, I think we're going to see some really, really strong rent growth, stronger than what we'll see in 25. But I do believe 25 will be a great year. And as Cole said, there has been a lot of positive sentiment because of the election. We're past that. And I think if we get, 100% depreciation back and other tax benefits, that's going to spur a lot of growth and transaction volume here. And I just think we're really blessed to be in this market just because, there are still good deals. And if you look at the national trends, Knoxville, our cap rates are higher than the national average. Our rents are lower. Our cost of living is lower. There's so many positive factors that are drawing people to East Tennessee. So I think it's, we're going to be in a good spot for investors, for people living here, the quality of life. I was with some people last night and they just said they moved from Florida even. They were saying it's just slower pace. People are nicer. With no state income tax, there's just so many benefits. And,
that is huge. I think that's why I'm going to retire in Tennessee.
There you go. You'll love it. You'll love it.
Come on down.
What do you guys do to help buyers get their offers accepted? With a lot of the competitive deals that Anthony and myself have submitted offers in on and been lucky enough to get our deals accepted. What do you guys do to help a buyer stand out in the sea of other offers and other syndicators and other purchasers? Because I'm sure you guys see, because I know you guys are typically representing sellers, you see a bunch of offers. So as buyer agents or helping a buyer try to get their deal done, what do you guys are able to do to help on that end?
Yeah, we always try to be extremely fair and honest, but we use our experience. So there's a recent deal that we just got an LOI on, and the deal is not stabilized. It's roughly 75% occupied. The seller obviously wants a way price up here. The buyer wants, significantly less. And so we're able to help bridge that gap. So with this specific deal, we put a clause in there that the seller or the buyer will close once the property is 90% occupied. And so we're able to bridge that gap of the price to get closer, where other buyers, they're saying, hey, I'm significantly lower, and that's kind of a non-starter for the seller. So we're able to say, hey, we'll give you close to what you want, but there's one hurdle. And if what you're saying is true, that the property is filling up, it should be no issue. So we're able to get creative and use our experience to kind of help make it a win-win for everybody.
And not only do we sell our experience, but we want to sell the buyer's experience too. So if we're representing a buyer, number one, we try to act fast. So if a property hits the market, and let's say we're representing you guys and you're interested in purchasing and you want us to represent you on the buy side, then number one, we would get an offer in very quickly. Whether it's a Sunday morning or Friday night, we'll get it done because speed is everything in this business. But then also selling your all's experience as the buyer, providing a bio, making it more personable for the sellers, selling our experience, and then also using data to back up why we are offering what we're offering. So, hey, here's our underwriting. We try to be very transparent, and we'll send other agents, sellers, we'll send buyers our underwriting and say, hey, here's why the numbers aren't working. Here's why this buyer is coming in where they are below asking. And then we provide comps as well. Like, here's the market rent comps. Here's the market sales comps. And that allows us to say, hey, seller, this is not personable. It's just the facts. The data is not supporting what you're asking. And sometimes we get told to screw off by those sellers, and sometimes that they see that data and they understand it and end up accepting the offer. So speed and honesty, in short, is what I would say.
So based on, and thank you for that, based on, I guess for the listeners that are just trying to get their foot in the door on the multifamily side, what do you think the best, kind of 0 to 1 for them would be? What would you guys recommend, a new investor kind of where to get started and what they would need to kind of bring to you guys to legitimize them as potential buyers?
I think the biggest thing is just to take action. So in my prior life, I worked and interacted with a ton of investors, and a lot of these people, they get, paralyzed in the analysis and they don't move quick enough. we always tell the groups that we work with, if we have a really good deal, it's going to go extremely quick. And so to be ready, to find a good advisor, find someone that you trust that can say, hey, here's why you should buy this property. Here's the potential red flags, or here's why you shouldn't buy that property. And then, really you have to know, the potential red flags. So where people get in trouble is they buy a property and they don't realize that, hey, there's a lot of deferred maintenance that can sink the property. But if you can fully understand what you're buying, you have someone that like, and trust that's been down the journey that can help guide you, and that you're ready to take action, I think you can, the sky is unstoppable. And the last thing is, don't be afraid. If you need to start with a duplex, that's fine. Or if you want to start with a 20 unit or an 80 unit, you just add zeros to the end of the number there. And so, you just got to get started, I think is the thing.
Work on your financing beforehand. Have a pre-approval letter ready to go. Interview property managers beforehand. So that way, if you find a deal, you can move very fast.
That's it. We learned with one of our recent transactions that property management is more important than the deal sometimes.
100%. We have listed many properties because the seller was fed up because they were having to manage the manager, and therefore that means that they are managing the property and still paying a management fee to a manager that was not doing a good job. And then they get fed up with it, and then they end up selling it. So having the right property manager is key. Our team, we have what we call a recommended vendor list for the Knoxville, East Tennessee market, where we have a list of property managers and their contact info. That these are property managers that we have vetted. We can tell you every good or not so good thing about each one of them, but we still recommend them because property management is a very tough business, and there are always ups and downs in it. But we feel like we have a really good list put together that we could recommend to any of your listeners here that are interested in getting in the Knoxville market.
What are some things if one of our listeners or Anthony and myself, because now you guys got me so excited about Eastern Tennessee, I'm about to tell Anthony to stop looking in Western Tennessee. But if we're and we really would love you guys to always keep us in mind with our buy box. But if you guys send us over a beautiful 50 unit complex, what should we, when we're interviewing a property management company, what questions should we be asking, and what should we be looking for in one?
So from my experience, so the biggest red flag is if a property manager is their attitude and their sentiment towards the property. So you want a realistic property manager, but if you meet them and they're not excited, they're not seeing the good in the property, then that's a really, really red flag. In my prior life, when I worked for this large syndicator, we interviewed many property managers, and I just remember thinking this property manager just kept talking very negatively about the property. We had them for 6 months and we fired them. And then we found someone that was like, this property is the best. They were able to really sell it. They believed in the property. I think that's just a very high level thing, is that you want someone that believes in the property, has excitement around it, and sees the same vision, but is realistic.
I know I get this question a lot. What are you guys doing to market the multifamilies? What avenues are you using when a seller comes to you with a property?
So we use every international, national, and local platform. We pay for the premium listing spots. So that way, if you're an investor in China, for example, and you Google multifamily for sale in Knoxville, our listings pop up first. So if we're representing you as a seller, you can be very confident that your property is on every single platform and being seen by everyone. We also, it's a deal by deal basis, but we try to create competition. So if we're taking a property to market, if we know that we're going to have multiple bids, we will set a tour date, we'll set a bid deadline date, and try to create competition that way. We also have a vetted internal database of over 5,000 buyers from across the country, many of which we have met or talked to or sold a property to. And so we also have that internally that we, some properties, our sellers will come to us and say, hey, I don't want to take this to market because I don't want to scare my staff. I don't want to scare my tenants, whatever that may be. And we can pretty quickly sell it just from our own internal list of buyers like you guys.
How does let's say a new investor, a new syndicator get your guys' attention, and how do they get in your short list? Because that's something that I wanted to know a year ago, how I get in front of the players like you guys.
Well, you guys brought us some really good bagels, so that won a lot of points from New York. But no, I would say if any of the listeners watching this, feel free to call or email me or John. I'm sure our contact info will be provided. Feel free to call and email us. We are readily available. Like I said, we work normal business hours, but often we are working at 8, 9, 10 o'clock on the weekends. We love what we do. So feel free to call or text us anytime. Send us an email. We'll set up a time to talk. And after we get to know you, learn what you're looking for, we'll place you on our list, and you'll start getting all of our listed and off-market deals. And we also, every month, we send out a market update, just local news stories about Knoxville, some national news stories about multifamily, and then a list of what we have available and what we've recently sold as well.
Love it.
One of my last questions for you guys, because I want to be mindful of your time, just explain to me the SVN brokerage, because we're seeing that a lot now all across Tennessee.
Yeah. So SVN we have over 220 offices, I believe now, nationwide. Each SVN office is independently owned and operated, so it is a franchise. And so SVN Wood Properties, SVN is our national brand, like I just mentioned, and then Wood Properties is our local brand. Wood Properties has been in Knoxville for 40 plus years, started as a development company. Actually, our company was some of the first people that ever built LIHTC apartments in the state of Tennessee. So we have a very heavy multifamily background, very well known in Knoxville. But the SVN network, our whole brand is collaboration. So when we take a deal to market, we split half of our fee with buyer's agents. And the reason we do that is because it gets a better result for our sellers. So if we take a property to market and we offer half our fee to buyer's agents from across the United States, that motivates them to take the property and put it in front of all of their clients, and it motivates those brokers to underwrite it and to try to sell it, because they know that they're going to get half of our fee and not have to fight for their own commission. And we have seen that work time and time again and get our sellers the best price and terms possible.
That's amazing. Someone who's a broker and in that industry, and to know that you guys are willing to either commission split or commission share, it opens it up to, I always say to everyone, it's about the eyeballs you get it in front of. So basically by you guys saying, okay, I know we have our pocket buyers like Anthony and Bryan, but I also have another 1,000 brokers that I'm friends with. It just gives it the exposure that no one else can provide.
Yeah, no, you're spot on. You're exactly right. And a lot of our competitors don't do that. And I'll just be very honest. Whenever I see them list a property, it's not very motivating for us to go spend a lot of time trying to sell their listings, because we know that their goal is to pay us nothing. And that is not our goal. When we take a property to market, we want our seller to make a lot of money. We want the buyers to get a great deal. We want the buyer's agent to get paid as well.
That's fabulous. Guys, last thing, and I'll let you guys both roll. You guys were out hunting 2 weeks ago. Tell me a little bit about that trip.
So I actually am very blessed. A developer friend of mine has a friend that has a 5,000 acre ranch in Texas. So it's a hunter's dream. I go every year, take a couple friends, and it's just a fantastic trip. It's probably one of my favorite, most simple trips that I go on. Being in nature, being able to experience what God created for us, and bring home some meat for the family is just a beautiful experience. But you are able to shut down. So all of us here, we live very fast-paced lives, and so when you're in the woods, it's just a really, really great experience to slow down, enjoy the world, enjoy nature, and beautiful trip every year we go on.
That's fabulous. Sounds awesome. Can you guys tell the audience where they could find you? We're going to put up your emails and your website and any social media, but just, what's the best way for them to get in touch with you guys?
If you go to svnwood.com/multifamily, svnwood.com/multifamily, you will see all of our contact info. You can request a free price opinion from there for any of your properties that you currently own. You can sign up to be on our emailer list from there if you're looking to buy. You can also see everything that we have listed and everything we've sold here recently. We also have a map of East Tennessee on there showing every deal that we've sold, and so you can see a lot of the hot markets where there's a lot of dots. That means we've sold a lot of deals there, and that's where a lot of our clients are wanting to buy. So svnwood.com/multifamily.
Guys, thank you so much. I can't thank you enough for your time. And Anthony and myself, we in 2025, we're taking down 2 properties. I want one of them to be in Knoxville, and who knows where the other one is. So
Yeah.
we really, really appreciate it, and we can't wait to do a deal together.
Yeah, let's do it. And after we get one closed, we'll take you hunting.
Perfect.
Thank you guys so much.
Awesome,
All right,
guys.
thanks,
Thank you so much.
Thanks for having us.